Musk loses $29 billion overnight, and Russia halts gas shipments to Poland and Bulgaria. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Tesla shares collapsed as investors continue to digest the implication of Twitter's acceptance of Elon Musk's $44 billion takeover. Tesla shares closed the last trading day down more than 12% to $876 and wiping $125 billion from Tesla's market cap, which now stands at $908 billion. And that brings us to today's Forbes Real-Time Billionaires ranking, where our biggest loser is Elon Musk, who lost a whopping $29 billion of his fortune overnight, but still with net wealth of $239.2 billion. Our second biggest loser today is Jeff Bezos, down $6.7 billion with net wealth of $165.2 billion. And our third place loser is Oracle's Larry Ellison, down $4.5 billion with net wealth of $103.8 billion. Check out our website and our social media for all of the latest billionaires news. Russia halted gas shipments to Poland and Bulgaria today after blasts in a breakaway region of neighboring Moldova led Kiev to accuse Moscow of seeking to expand the Ukraine war further into Europe. Russian energy giant Gazprom says it cut supplies to Poland and Bulgaria, and Poland's state-owned gas utility confirmed that Gazprom has completely stopped gas supply to Poland via the Yamal pipeline. Explosions this week targeted a military unit, the state security ministry, and a radio tower in Moldova. That triggered alarm that Moldova could be Russia's next target in its push into Europe. Saudi Arabia will buy as many as 100,000 electric vehicles from automaker Lucid Group over the next decade. The EV maker signed an agreement with Saudi's Ministry of Finance for 50,000 EVs over the 10-year period, with the option for another 50,000. Lucid, which makes its sedan Model Air with a price tag of $169,000, says it would begin handing over the EVs by the second quarter of next year. Saudi's public investment fund has a 61% stake in California-based Lucid. Shares in Google's parent company Alphabet sank after its Q1 earnings missed market expectations, with profit down from a year earlier. Alphabet reported net income of $16.4 billion in Q1 on revenue that climbed 23% to $68 billion when compared to the same period last year. The quarter brought strong growth in Alphabet's search and cloud computing businesses, while it continued to invest heavily in products and services. Microsoft, meanwhile, reported strong quarterly earnings powered by demand for cloud computing. The tech titan saw an 8% year-on-year rise in profit to $16.7 billion on revenue of $49.4 billion. Revenue in its intelligent cloud unit that meshes data center hosted software with AI surged. Also, a business and productivity unit that includes its Office 365 software boosted revenue, and growth for LinkedIn continued to be Microsoft's lower profile success story. General Motors lifted its 2022 net income forecast following a mixed quarter as it benefited from strong consumer demand amid high vehicle prices despite lingering supply chain problems. GM now sees 2022 net profit of between $9.6 billion and $11.2 billion, up slightly from the prior range. Net income in Q1 dipped 3% to $2.9 billion on an 11% jump in revenue to $36 billion. GM's auto deliveries declined in the wake of supply chain shortages, especially a crunch of semiconductors. Key figures on the American left have shed thousands of followers since Elon Musk's planned purchase of Twitter emerged, while numbers have soared for right-wing politicians. The news of Musk buying Twitter was greeted with enthusiasm by his fans and with horror by proponents of disinformation and hate speech. Promises to leave the platform trended under hashtags like Leave Twitter. Former President Obama, the most popular person on Twitter with more than 131 million followers, lost 300,000 of his followers nearly overnight. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. See you tomorrow.